we're going to go ahead and get started. My name is Dan Orkin, co-founder here at Envision Blockchain. And here we're going to be talking about blockchain trends for 2021. Seriously, a lot of things to pack in here. I'm not going to spend too much time about who Envision Blockchain is. I see that we have a couple new faces here. So just by way of introduction here, Envision Blockchain is a consulting and custom application development company. We help out from developing POCs to different MVP rollouts, helping out from token development, smart contract development, so on and so forth. Specialty recently has been on the user interface side, tying together the user experience together with some backend services. And as you could see in the middle tier over there, modern and cloud and on-prem solutions, a lot goes into a blockchain-based application. So for those that are familiar with this type of architecture, if you take a look at the different applications that we've been involved with over the past 3 years now, a nice mix of really everything there. And as you'll notice, on the right-hand side, a lot of workshopping. There's a lot of education that still happens with the blockchain industry. People want to understand what can we do with tokenization? What is the baseline protocol? How do we use the mainnet? How do we use blockchain and IoT? Or just at the very bottom, we have Blockchain Discovery Day, really popular workshop here at Envision. So what I'm going to cover here, I'm going to assume that everybody has some sort of an understanding of blockchain, have heard about some things. We're going to get into some concepts that, especially on the infrastructure side, that may be a little bit more in depth than just an intro class. But definitely, if this is your first time hearing about blockchain, I see that there's a couple new faces not really familiar as to where you are in your journey. Feel free to reach out to us afterwards and request a discovery day. We'd be happy to spend some time and really get you familiar with some of the concepts that we're going to be talking about today. So without further ado, let's get into it here. So the blockchain trends for 2021, the agenda is really in two different sections, if you will. I call them the infrastructure section and then different sectors, or really I'm going to be talking about different type of use cases. What's important to note here is that, as you can imagine, that there's just no way to cover literally everything going on right now. And just because I'm going to mention something doesn't mean that it's the best. This is not really a best thing. This is more of just what's happening, right? So if you were to schedule a phone call with us and say, hey, what's going on in your world? These are some of the things that Envision Blockchain has really been seeing, putting our hands into, really experiencing, and just things that we just hear in the news that we thought, you know what, kind of setting the stage here for 2021. This really fits the bill. We typically like to do these type of presentations on a monthly basis. So to begin with some of the things that we hear, it just is pretty fitting. So when we get into the infrastructure discussion, there's really a ton of infrastructure to talk about. But realistically, what it is that we're going to be talking about are some of these points. So for example, we're going to talk about some movements that we've seen over the past year that have now really starting to take the main stage here in 2021. So for example, some of these are in the world of, you're going to start to hear a lot of this move from private blockchain to public blockchain. We'll explain some of the thought behind that. There's privacy implications, obviously, that go with that shift. And then there's scalability factors as well. In this public world, you're also going to hear a lot about proof of stake. And whether you're in public or private really doesn't matter. These next 3 points are going to be really important to keep in mind. Line of business application inclusion, I think, is going to be a real hot topic this coming year, as well as tokenization, which has been really popular, I want to say, since 2015. But now we're really starting to see use cases that are involving tokenization. We'll discuss some of them as well. And identity is very important, and we'll make sure that we touch upon that. So we're gonna kickstart this off with a discussion of this private to public and the shift to there. And there was this article that came out, I want to say about a month ago, and Prism Group did an internal data survey that went back all the way to 2016. We thought that it was really interesting. The fact that they had quoted here that the average enterprise blockchain consortium has gained less than one participant beyond its founding members. It's going to let that sink in for a second. It's my belief, and I say this with caution because I don't know the story behind every single private blockchain consortium. It is my understanding that it is very difficult to stand up a consortium. If you're involved in that, you're probably nodding your head or laughing it off a little bit right on your side. There's a lot of legal that goes into it. There's a lot of infrastructure that needs to be discussed and agreed upon. And then there's this barrier to entry that's really high for adding a new participant. There's IT setup, there's all sort of governance that needs to be added, and it made it very difficult to add new participants to that network, where some of these core values of blockchain really rely on a network effect. So the more participants in your network, arguably the safer it should be, and the more value that comes out of that network itself, right? So that's some of the reason why folks are really interested in the public blockchain, because when you have more participants, you have a bigger network, which means that there should be theoretically a better network effect, as they say. So, we're seeing that there's this shift of this. We're going to move and migrate from private blockchain to public. We've heard about a couple projects that are currently in that move right now. And the whole thought process is, well, we need to grow our network. What good is our network if it's only our initial 4, 5, 6, 8, 10 different, founding members, if you will? We need to add more. So by having this public, always available, 24/7, easily accessible and discoverable network, aka a public blockchain, and there's many out there for you to take a look into. This is kind of the basis of where that shift is happening. So moving along, privacy. Now, when you're moving on to a public blockchain, privacy is really utmost important, especially in some of these enterprise use cases, but just beyond B2B, from B2C as well. So one of these trends, which is leading the privacy initiative, in our opinion, is zero knowledge proofs. And for those that are not familiar with zero knowledge proofs, it could be very simply put that zero knowledge proofs, or ZKP, allows one party to prove secrets to another party without revealing what that secret is. Now, if you were to dive into a real simple diagram that was put out by Karthik at EY during the Baseline Summit of 2020, which was just a couple months ago, he put out a really nice diagram that just kind of shows, look, you have a claim, and then that claim, there's a prover and there's proofs. So whoever has that access to that proof has the understanding of what that quote unquote secret is. Basically, this is your way to prove something without giving any information about what that is. For those that are technical, it really just gives you a true or false. So whatever they want to claim, they can claim what they did. And then there's this true or false. So let's say that you want to see whether or not an apple is an apple. If you're holding up an orange, it will say that it's false. If you're holding up an apple, it'll compare it to the initial and it'll say that it's true. I might have gotten a little too technical, and I hope I didn't lose anyone. But again, if there's any questions around what zero knowledge proofs are, how they can be used, what claims are, what proofs are, what verifier keys are, it's going to be important. We really recommend that you do some due diligence on your side, do some research on your end. Feel free to reach out to us. We'd be happy to talk to you about this. Zero knowledge proof essentially is one library that you would include in your ultimate stack, right? So whatever the stack is that you're providing in your blockchain-based application per se, you would include a zero knowledge proof library or a circuit or something along those lines that would help you achieve that level of privacy that you're really looking for. Now, again, this is really more geared towards public blockchain. It can still be applied to a private blockchain, but there are private blockchains that have a lot of privacy components to them already, where maybe zero knowledge proofs is not necessary. What we're talking about again is this whole shift from private to public and the uses of zero knowledge proof in order to allow that type of enterprise use on a public blockchain. One thing to note is that the use of zero knowledge proofs, or ZKP, you'll see we're going to talk about a scaling technique that happens in layer 2. We'll talk about that in a couple slides further down. But there is the ZK rollups, which is really just an aggregate. So instead of showing all of the transactions that happen, for example, on Ethereum, you can roll that up in a zero knowledge proof rollup. And that's one of the layer 2 solutions, which is currently being implemented. So we'll keep going here. And well, that's actually the next slide. So that's perfect. So here we're talking about scalability. And again, we're still talking about public blockchain because private blockchains still don't have that issue of scalability. Now, for scalability, I'm not talking about the different type of uses you can get out of a blockchain or out of a network. You should theoretically get more than one use case out of a network, but then again, you've seen private networks that are set up for one specific type of use case, and that's just that. Again, that all depends on the governance structure. But essentially, what we're talking about is this high congestion, and there's no way around it for those that are familiar with the public blockchain space. And we're talking about Ethereum, and we all know what happened over this past year, where we're going to get to DeFi in the next couple slides. Essentially, we're seeing that both B2B and B2C use cases, there's this emerging need to be able to control network congestion and high transaction costs. And that's a serious thing, because when you take a look at how businesses are providing throughput through the network, you're seeing that there's a ton of business that happens. Whether you're in supply chain, whether you're in finance, it doesn't matter. On an enterprise level, there's still tons of transactions that are happening, a lot. And the more the network congestion is, the higher the transaction cost seems to be. There's some folks that have argued that it's not directly correlated. I've just seen the opposite. I've seen that the more network congestion happens, the higher the transaction cost. There are things that are being done right now to control that. And some of those revolve around, for example, layer 2. So like the zero knowledge rollups, the ZK rollups. So what I just mentioned is one. There's a ton of layer 2 solutions out there for you to take a look into. This is something that you're interested in. We're not here to ramble off a ton of them, but just in general, there are a ton of layer 2 protocols that are being looked into. Proof of stake is not a layer 2 solution. It is a entirely new consensus algorithm, which we're going to get into next. But proof of stake is also something that's aimed at helping out the scalability, and that's due to the type of consensus algorithm and how that works. Gas pumps is also something which is being considered for, specifically for Ethereum, but we can see this being something which needs to be implemented for public blockchains in general. So, for example, in Ethereum, there needs to be a way for corporate organizations to be able to estimate and budget for their gas transactions, right? So, just taking a couple steps back, looking at the audience again, there's some familiar faces, there's some that are not familiar, so I'm going to assume that they may not know, but in order to run applications on public blockchain, you need a decentralized application that is powered, for example, on Ethereum, that is powered through gas. That gas, it's ether, there's a cost to it. So if you take a look at that one analogy in the business world, it's like paying a SaaS fee. It's like paying cloud consumption, if you will. And most, account executives are able to say, well, look, for example, in Azure, your Azure consumption is going to be X amount of DTUs, and you can come up with the way to budget that. Right now, it's really hard to come up with that sort of estimate on a public blockchain like Ethereum. So there's this concept of a gas pump, which is a service that allows a prepayment, if you will, of that type of gas fee There's a premium attached to it, as you would imagine, but it provides a way for companies to be able to budget for that. So moving forward, proof of stake. So again, a huge trend that I'm sure that most have heard in this presentation is, for example, that Ethereum is moving from consensus algorithm from proof of work to proof of stake. We're not going to get into what proof of work was, and specifically not into what proof of stake is. We can spend a whole nother presentation on that. And just for a frame of reference, Ethereum is not the only proof of stake protocol out there. It's just in 2020 and 2021, kind of all eyes are right now on Ethereum 2.0, meaning that there's a lot of rah-rah around this whole move to Ethereum proof of stake. In it, what it's supposed to do is provide better efficiency because of the mining algorithm, that you don't need to use lots of energy in order to mine blocks. It's a really important concept for environmental factors, as well as just straight up efficiency. Lower barrier to entry, meaning that you don't need the hardware in order to provide that type of validation. The idea is that there's going to be more validators that are able to enter the market, thus securing the network even more. The next one is stronger immutability to centralization. Kind of covered that in the previous point, but again, that's where the move for private to public blockchain has some of the from private to public blockchain has some of the appeal, where there's more network, there's more decentralization as opposed to a perception of centralization. And then, of course, there's stronger support for shard chains. Shard chains is an entirely new infrastructure that's coming in Ethereum 2.0. It's really a key upgrade in scaling the Ethereum network, where there's different shards. Now, again, this is where the layer 2 solutions comes into play, where each of these shards are like a region or like a zone, and all those zones roll up into this zero knowledge proof roll up, if you will, and then that's how they're able to kind of segregate and then provide the scaling factor, as opposed to just one main large network. Again, if there's any questions around that, we really recommend that you go ahead and send us an email. Happy to chat with you about the move to Ethereum 2.0. Probably our favorite one, and this is the little plug for Envision Blockchain, is this line of business application inclusion. Over the past year in 2020, we spent a lot of time and a lot of energy and a lot of resources into the baseline protocol, which really combines advances to really everything that we just mentioned, plus more, in one protocol, in one, it's not necessarily a solution, it's more of a methodology, that it provides cryptography, messaging, blockchain, not necessarily a specific blockchain, but just a blockchain. We want to say a mainnet at that, which enables a common frame of reference between different systems, including traditional corporate systems of record, any kind of database or state machine, and even different blockchains or DLTs, right? So in short, this is one of our favorite trends. Is when Envision Blockchain started in 2018, it's now 2021, going on the third year. There was a lot of new application development, right? So there was this new user interface, there was this new portal that needed to be built that did this particular thing, which made companies kind of weary to adopt blockchain because they were already using their own systems. There wasn't really a clear path of integration between existing systems and a blockchain. And to make it even worse is that maybe there was a way to include one system of record, or one system, let's just call it a system, one system and a blockchain. But now there needs to be a way to connect your trading partners, for example, or your other network participants to that same ledger. So everyone was coming up with their own ways to do it. So enter baseline protocol, which is a standard for integrating your systems of record together with a mainnet. So as you can see here, we have the picture for Dynamics 365. That's some of the connection that we've been able to do and contribute to the baseline protocol. And again, if you've been keeping up with us over the past year, we've been providing a lot of demos around the integrations that we've been providing for this Microsoft Dynamics finance and operations, which is now actually D365 finance and D365 supply chain management, which is, you know, your typical supply chain management ERP, but now running specific workflows on the mainnet. Again, really a big trend, which is going to be coming out in 2021, in our opinion. The next one with regards to infrastructure is tokenization, and just kind of keeping an eye on that time. I'm gonna go through the next slides kind of quickly. So tokenization has been really big. What we've seen is that there's a need for the tokenization to provide a digital representation of some shared value, whether it's money, documents, movie tickets, etc. Through this, we've been seeing that there's these, blockchains that have been providing, for example, the ability to tokenize. Most are familiar with Ethereum and their tokens, the ERC20s and the 721s, but Corda also has just released, I want to say about a year ago, they just released their token SDK. They've been through a couple iterations of that, and also Hedera Hashgraph I think just this past month just launched their brand new token SDK. And I'm sure that there's other blockchains that also have recently come out with this tokenization effort as well. Tokenization, as you're going to see in some of these use cases, are going to be really important. Identity is also going to be very important. You can see right here that there's a diagram also from the Baseline Protocol Summit 2020. Kale Teeter from Microsoft put out a registration flow for the use and the issuance of decentralized identity credentials. So a DID really stands for a decentralized identifier, which can be for any type of subject. So for example, devices could have a DID, people can have a DID, businesses can have a DID. They can be external, they can be internal. Internal DIDs are nothing more than just like a corporate ID, if you will, right? But these DIDs enable trustable transactions that are associated with that specific subject. So at the core level, imagine an individual that had their own DID that can take their information with them from company to company, or from doctor to doctor, or from place to place, and that information belongs to them. But there's been a lot of work in DIDs in 2020 and 2021. We believe that is going to be the emergence and the use of DIDs to another level that we really haven't yet seen. So that kind of concludes the infrastructure part of it. And now let's see how all these infrastructure trends are all tying together with some use cases that we've seen. Now, again, we wouldn't have enough time to list literally all of the use cases that we're privy to, and all the use cases we're involved with, and all the use cases that we see in the news. I mean, there's a ton out there. However, there are some that we feel that are just standing out more than others. So for example, one thing that we've been able to identify and really tie together is that really good use cases, really solid ones, have really two major sectors that they contribute to: accounting and accountability, right? So accounting by itself is good, accountability by itself is good, but when you're able to bring in the accounting aspect of it, which blockchain does a really great job for, and accountability for, which is where you get that immutability value that blockchain provides, you can really find some sweet value within that type of use case. So some of the use cases are, for example, in supply chain, in real estate, and decentralized finance. So let's just dive into those and kind of see what that looks like. So with supply chain, I mean, we could talk all day about different supply chain use cases. As a horizontal, it's huge. And supply chain and blockchain are really paired well together, given the nature of their multi-party ecosystems. Some of the news that you've seen today, for example, we talked about tokenization. So you'll see in the next coming months, a tokenized invoice use case from Coke One North America Services. We'll talk about that. That also came out. And then also is this reimagined RFP process from Microsoft. We'll talk about that and see what that looks like. So, for example, with Coke One North America, they had this goal of establishing a bottling harbor that enables a low barrier network joining process for Coca-Cola bottling suppliers. Remember, I was saying that it was difficult for new suppliers or new network participants to be able to join. So, this use, and this is actually tied behind the baseline protocol. The baseline protocol and supply chain, it goes really hand in hand together. But what it allows by using this mainnet is it's going to make it easier for you to join regardless of what ERP that you're using. It's simplifying the RFP process, it's streamlining communications, and it's providing this baseline invoices, which really start to begin to open the process, the possibilities for adding tokenization to invoices, and then opening the door for automated payments and DeFi applications down the line. And this is something that Coke One North America has been public with. They've been in presentations about. Provide and Unibright have been kind of leading the way with this initiative within the baseline protocol community. We are really looking forward to seeing how this supply chain use case is really going to turn out. The other one to talk about is just last month. I don't remember the exact award that Microsoft won for their supply chain use case, but they won an award with Gartner. I have to go double check as to what that is. You can type into Google about it. But essentially, they also reimagined their supply chain by including blockchain-based applications. And the benefits have been around cost efficiency, agility of operations, quality management, security, legitimacy. I mean, everything from price, reconciliation, overhead, payment terms, compliance. I mean, I could read all these down. I'm sure that everyone has this. Feel free to take a screenshot. We're also going to be posting the recording on our website. But down to the PO revision history tracker, immutable ledger, authenticity, compliance to the law, compliance to company policies. I mean, so on and so forth. There are so many benefits that Microsoft was able to realize. Gartner gave them some really nice end of the year 2020 award, forgot what it was. But again, this is what happens when you're able to bring new technology into an existing supply chain that was really, really in need of a facelift. Really quickly, rambling off a couple other real estate use cases that we are hearing that are incredibly important right now within real estate, gaining more traction, really operating in a digital environment improves the operational efficiencies, right? So the popular use cases that we're hearing about is around investment management, where again, tokenizing assets really enables the once high minimum investment that used to be needed in order to enter the market. Now you can lower that and make it smaller with fractional amounts. That allows really, smaller investors that may not have as deep pockets but are still able to contribute. So you can fractionalize that investment, thereby lowering the barrier to entry and increasing the portfolio. Land registries is also really interesting because when you take a look at the infrastructure that dealing with land registry use cases that you had with relying on paper documentations that are, vulnerable to losses and fraud and mismanagement and mishandling, all that, to be able to operate that in a digital world, again, tokenizing them, it really provides another level of efficiency, which is part of this digital revolution we've been seeing over the past 10 years. This is like that next wave of that. Last but not least, we're going to conclude with decentralized finance. I mean, for anyone that's been under a rock over this past year, decentralized finance, or DeFi, it really it blew the lid off of 2020 as far as investment is concerned. There was a massive growth, as I read, as I have written here, from 675 million to over 15 billion in total value locked. I mean, that's crazy. It was such a massive growth. And what we really did, when you take a step back and you take a look at what this decentralized finance provided us, is it provided us with really this new type of banking infrastructure, which already existed, but now they're able to do it immediately. So what we saw was flash loans. So for example, a user can borrow funds, they can stake them in some protocol, they can earn a profit, they can repay the loan all in one transaction. I mean, the ability to do that quickly and efficiently was unheard of. And if they fail to repay the loan, the entire transaction becomes null and void. It's some of these things that has also led everyone to kind of scratching their heads around the network transaction, the congestion, the high transaction fee. Liquidity pool was also something important. I mean, liquidity pools in essence are these pools of tokens that are locked into smart contracts. And they're really used to facilitate trading by providing liquidity, and extensively used by some of these decentralized exchanges, which again, anytime you get into a decentralized something, it's typically good, as opposed to centralized infrastructure. Composability. Now, this is also something that was seen, experimented with, and really enjoyed by many. What you saw was, at very simple level, a user was able to take some of their asset, stake that, so put that into somewhere. Then they can take out a loan of some other asset, which can earn them interest by putting it onto another protocol, right? So then you can even, depends on your risk tolerance, you can even have another strategy where you can take that and enter margin trading and do all sorts of composable things, configurable, trading was really possible. So all these things led to this new banking infrastructure that many are looking at. And we really feel that 2021 is going to have a lot of these great use cases coming to mainstream, and many more after that. So again, this isn't every trend that's out there. This isn't everything. It's not the most important. It's just some that we've seen. It's some that we've heard. It's some that we've put our hands in. So for anyone that has any more questions around any of these topics that we've talked about, or if you have any of your own, go to our website, www.envisionblockchain.com/enterprise blockchain discovery day. You can go ahead and request a workshop. We'd be happy to spend some time, discuss some of these topics with you, or anything else that's on your mind. Again, if you have any questions, feel free to contact us. The email is right there on the screen, info@envisionblockchain.com. Again, our website is www.envisionblockchain.com. Feel free to call us, even 800-513-8334. And, again, we like to do these on a monthly basis. So if I don't hear from you then, we'll talk next month. Thank you so much. Take care.